It's 12 o'clock. Welcome to Taking Stock. It's 23rd of January 2024. Johnny Boy's here. You're right, John.
Not bad, how you doing?
Yeah, nice. Is it raining where you are? It's gone from freezing to now tipping down with rain. We have lovely weather in Britain, don't we?
It's a bit drizzly.
Yeah, awful. I want to move away. I think I'm going to move away for 3 months of the year. Somewhere nice, somewhere warm. Let's look at the markets. Are they warm? Are they heating up? Because do you know what? I was reading an article, actually. It came out yesterday, right? I maybe should have picked up on it yesterday, but it's from the EY Item Club, and they say they see recovery in late 2024 this year, and they say inflation is going to come faster than the bank thinks, and interest rates are coming down faster than they think. So that's good news. But go on.
Well, I was speaking to Jamie Constable at Singer yesterday. Yeah. I don't think that interview's up on site yet, but it will be soon. And he has much the same view. We do a big drop off in inflation, sort of sometime in the spring. Although we've got a nasty jump to come next month as well as the energy price cap goes up. But what we will see is that as inflation drops out the system, rates potentially come down towards the end of the first half. You'll see some serious tailwinds for consumer confidence and the markets as well.
Yeah. By the way, John's got a bit of a dodgy mic. Yesterday, someone said to me I was talking quietly. I realised my mic was quite far away from me. So, John, you have to speak up because I think the mic you're using, I know you had a bit of a problem with your mic just then. Yeah. But so shout if you can. Just sing everything. There we are. There's the indices. FTSE 100 down. Your favourite stock is number one riser, John. Ocado. Anglo-Americans up there. JD Sports. Oh, people say I shouldn't mention that. So one person, Dave from London, it was. I remember Dave said, "Stop mentioning JD Sports." I don't hold any JD Sports. Just they were in the news a bit. FTSE 250, it's up a smidge. In fact, the best performing indices is the AIM All Share. Yes, get in there. Up 0.34% to 737. And so the thing is, when you see these, John, these macro, so they are forecasts, of course. In fact, let me just get the words up here, what this EY Item Club says. They said that the UK economy will benefit from falling inflation and lower interest rates in the second half of the year, boosting growth and allowing the government to offer pre-election giveaways. That'll be massive. They can't give away enough to win enough votes. So they're going to try and chuck everything at it, starting in March the 6th, I think the budget is. An increase in gross domestic product. So it was of 0.7% 24. They've upped that now. They're saying, I think, 0.9%. And UK economy is now forecast to grow by 1.8% in 2025, up from 1.7% predicted in October. And there we are. They're saying
the further out you get, the less forecast meet.
Yeah.
I guess for this year, it's hardly blowing the lights out. As Jamie Singer pointed out, we are sort of still in sort of treading water in that respect.
Yeah. But surely I said that the interest rates coming down. First of all, of course, inflation is what they're looking at. If that comes down fast, and they think they've solved it, they've cracked the inflation's back, and interest rates come down, it'll have a double effect, because first of all, of course, then, any company with debt will struggle less going forward. There'll be more money to spend. But also, people saving who have taken a hammering, in 2022, 2023 in the markets, maybe, and now put their money in a safe interest account, then that will be going down. Savings rates will be coming down. And when you've seen the market rally and, by double-digit percentage gains, and you are sitting on 3% in your savings account, you think, well, why put it back in the market now? It's time. The bull market's here. So it'll be interesting to see. Anyway, let's go to the front page of Vox. Up there, just chatted to Andrew Polaire. They've raised some money. They said that funds allow further development of a beet supply mine. Lots going on there. I know some people are angry about that, raising money, but the thing is this: they're, if you're a loss-making company, where do you get the money from? It's part of the market, isn't it? If you want to avoid placings, then I suggest invest in a company that is generating cash.
Yeah, it's not that simple. In some sectors, they are developing assets. You are going to see placings, and that is how they fund the developments of what can ultimately one day be very, very lucrative assets. yeah, if you want something a little bit steadier, then go for cash generative companies. But that's not to say that if you have a more speculative mindset and want to perhaps participate in massive upside should these projects come to fruition, then this is the game you play.
Yeah, yeah. Well, yeah. If you want high reward, you've got to take high risk. That's it. I did say yesterday, John, by the way, I was saying, how do people invest? And I said, largely, investing in individual companies, especially smaller companies, the more speculative side, it's very hard. It's very hard. And I think a lot of people aren't suited to it. And most people lose money. Most private investors lose money on individual companies because, they hold on to their losers too long and they cut the winners too fast. And I think most private investors, the backbone of their portfolio should be a fund, and then you can have a dabble around, but you should top up that fund on a regular basis. So when you get to the point where you're going to retire or something, at least then you've got that fund there. If you've blown it on private, on individual, because investing's not easy, is it? It's not easy at all.
Well, that approach you might call core and satellite. So
I like that. Yeah,
you have your
yeah.
core steady foundational holding in your portfolio, and your satellites provide the alpha potentially.
Yeah,
and
exactly,
those satellites could be other funds in perhaps riskier or more speculative areas of the market, or they could be individual equities.
Yeah. Well, do
I think your core could be your pension, your corporate pension. I think equities a lot of the time, will provide you with the opportunity for fun and learning how it all works.
Yes, but I think always have that, like I said, that core there as the almost safety net. My rule of thumb is this, essentially: take your age. That's what percentage should be in quite a safe, fund locus. So if you're 50, for example, and if you've had, over 10 years of experience investing, I mean that if you haven't, if you had less than that, I think it should be your age plus half. So 75%. Now, if you do put 75% in a fund on a regular basis, and literally you dabble in other individual stocks and they do well, doesn't matter. The individual stocks will take a bigger part of your portfolio, and you can put the rest of that into a fund if you want. But I think overexposing to really small, tiny, micro cap stocks when you're not doing it full time, it's hard. Even the professionals get it wrong on a regular basis. So, I don't see why private investors would expect to come in, and within year one, year two, and make money. Okay, the bull market is different, but in a bear market, it's very hard indeed. Okay,
are we going to ever have a return to the market conditions we had for the last 10 years? And again, this is something I talked about with Jamie. We had an era of free money to all intents and purposes, and that rising tide, that free money lifts all boats. What we may be coming into is an era where stock picking comes to the fore again.
Yeah. John, that free money thing was, at the start, that was an emergency. The reason why reducing interest rates is a temporary emergency measure. It lasted for 10 years, and like I said, I don't see. Hopefully now it'll give a good reset to the banks so that they don't go crazy. They can bring interest rates down to a level that's it helps the economy, but it's not sort of free money. So like 2.5%, 3%, whatever it's going to be. But then it will help. So I think stock picking, definitely.
Well, what you may see, is companies that were built in that era that really exist on the basis of free money struggle in the sort of conditions that we're likely to have in the years ahead. You're likely to see a lot of businesses misallocated capital. That will disappear. That will go up in smoke potentially, but you will have a situation where what's left at the end of it is a much stronger, more efficient, more productive pool of investment opportunities.
Yeah. Do you know what's interesting? Actually, someone did point out here. Where was that? ME. The S&P sales to an all-time high. Yeah. You have to understand, if you look at equal weighted S&P, the performance isn't anywhere near as good as the performance with the big titans in there, the Mag 7 as they're called. But I do see that as a bullish thing. I do see a trickle down because even the big stocks, I know they've done a huge return. it gets to the stage where they can't keep returning that amount. They can't keep going. So I think people will look for, opportunities elsewhere, and you get that trickle down. I think you'll see a broader rally happening. But by all means, join in the comments. That's what the live bit's about. Join in the comments there. Hit that thumbs up. Subscribe if you could to the channel, and don't forget download the Vox Markets app. voxmarkets.co.uk/app. Graham says, my wife is with her sister in Gran Canaria. Am I working hard? And I'm working hard. Who's got it right? January is an awful month. Yeah, I've often had an ambition to be able to spend 3 months of the year away from the UK. Maybe December, January, Feb, come back March. But yeah, it's definitely worth thinking about. Okay, front page of Vox. Let's have a look at some content here. I just started watching a bit of that thing. Gervais Williams, very clever guy. He's an intelligent guy. I do enjoy watching him, and he's chatting with Paul there about many companies. In fact, let's have a look at the companies he's talking about. There we are. There's quite a few there. Good, Loads Group, Concurrent, Ondo, Silent Canode, Smart Tech, Truth, Ingenta, Vactors on there. That'll get plenty of views. Oxford Biodynamics, Inspiration Healthcare, Hustle World, loads of them. So check that out there. There's an update here on NetScientific. I don't know much about them, John. What are they all about?
They're an investor, sort of investment company, VC style, venture capital style, invest in deep tech, life sciences. I kind of think, as risk appetites improve across the market, these are the kind of companies where you'll see some potentially quite sharp re-ratings. Higher price to NAV on this company is about 50%. So basically, the value of its share price is half the value of its stated assets, of its book value. So we see this across the sector, particularly in the sort of more more sort of speculative private market side of things. You're still getting investment trusts, investment companies, investors like this trading at very deep discounts to assets.
Yeah.
And I think that's that goes back to sort of some of the ebullient, some of the sort of behavior we saw when money was cheap, that a lot of assets were being priced, private assets priced too highly. But a lot has changed since then. So this is where you can find some real sort of deep value bargains. This sort of sector. Yeah. This company is liver diagnostics.
Okay. Crimson Tide shares gained an update here. Victor's writing about that there. 11.6 million market cap.
Turnover. The important thing here is that they are going to be EBITDA profitable this year.
Okay, good. Yeah, and they've got those nice sort of recurring contracts, haven't they? Which people like to see. It's a recent low there, but it's starting to rally a little bit. It's quite nice. Above 50-day, Crimson Tide. And they got some big contracts with some some big supermarkets, all that kind of thing.
There was one in the statement that I actually really like actually, the employee benefit trust. So I think this is something I look for in companies that they incentivize their workforces by enabling them to enjoy the upside that they create through the company's share price.
Yeah. There's you, John, taking the Poolbeg. You put a shirt on for that one, did you?
A while ago, that one. Yeah.
Okay. Bouncing a little bit. Big Technologies. I did a run through on that to my spreadsheet. I know it's come down a lot, but
it was a massive fall, though, wasn't it?
Yeah, I didn't see a lot of upside there. Look at broker forecast and that stuff. I don't see a lot of upside there. If I just, I mean, they're on about 5 times sales anyway, but I just think I don't see the value there, to be honest. And of course, it could be a momentum and growth play there, but growth is concerning now, isn't it? Most followed East Star Resources, Lord Group, Atlantic Lithium. In fact, there haven't been any news out. Most read today is Vast. Boohoo. I didn't check this trading update up. Any good?
No, not a lot. But they've the CFO stepped down.
Oh yeah. Oh no. Do you know what? I did read that this morning, but I didn't even read the trading update. It's just
there was nothing in
no, exactly. So CFO is stood down by mutual agreement. You often wonder whether it's really mutual. I think is it mutual? Listen, Sean.
One can
step down. Step down
not?
or give the elbow. Okay, it's up to you. But if you want to say you've left, it's fine. Okay. It's fine. Boo is still struggling on the chart there. In fact, another one sort of retailer today, Quiz, came out with a trading update, didn't they?
Can't see this company going to be around for much longer.
Really? Ooh, is that bad? Let's have a look.
Yeah, it's basically sales down 11%. Liquidity is draining from the business at a rate of knots. And reviewing strategic options.
Yeah. Oh, look at that. The group's £4 million bank facilities available will expire in June. There are no financial covenants applicable to these things. Okay. Yeah. All right.
Yeah, it's just one I, probably wouldn't pay a lot of attention to.
Yeah. Yeah. Okay.
But this is what I mean. This sort of in retail, which was a sector that Jamie and I spoke specifically about. You've got winners and losers. The strong will survive. It's all about stock picking.
Yeah. Atlantic Lithium notification major holdings they've increased, have they? Is this just the voting rights are Saw and Piedmont now, so 28 and 5.2% respectively. As the company's largest shareholder, we believe that Saw's purchase of Atlantic Lithium shares at a premium to the current price, increasing their holding reflects their belief in substantial value potential that together with Piedmont we intend to unlock in the Awoya lithium project. In fact,
it's a great project. It's a great project. The lithium price is on its knees at the moment, so
that's it.
You've got to think they're playing. They're confident in lithium. They're confident in the project. So why not buy a small premium?
Yeah, and that's it. The thing is, the thing to keep an eye on is lithium prices, okay? Because like Neil came on the podcast and said, we don't mind at the moment. We're obviously not producing anything. Our cost of production is very low. So there are companies out there whose cost of production is a lot higher than ours. Will be taken out of the game. They'll just mothball it. So what happens is then when the ramp up in lithium happens and the price goes up, by the share price will rise anyway. If lithium price goes up but by the time that happens, 2025, they're predicting deficit, then there'll be a lot less producers in the market as well. So, so the share price, that's what you get with commodities like that, is the hot commodities. You get these boom bust cycles where literally now we're in a bit of a bust cycle, but that won't take long before it booms, And then, I think, if you are into resource companies and miners, it's worth taking a position in some lithium producer because, it'll move in tandem. Russ says, will Saw go hostile? As the major shareholder that they know all has a huge resources, and ASIC is far lower than most. Well, I don't think they go hostile. They're good friends of them, but they can see the opportunity there, so they're increasing their stake. So okay. Yes, I said now it's time to go aggressive while lithium price is depressed. That's ME saying that. Markets as bleak as the weather, says Michael. Okay. Yeah, absolutely. Rich Dad is comments on Vast. I better not repeat that, but there we are. It's a couple of good trade updates there. I thought Brave Bison had a good update. 28 million market cap. They are in social media marketing and advertising, all that stuff, but not a bad performance considering for the year. Their top line revenue still up 12%. Profit before tax up 38%. And so revenue's top line is in 20 million. Net revenue, gross profit, 20 million, 16 up 23%. So I think EBITDA not less than 4.3, net cash ahead of market expectations at 6.8. To me, that's good going in these markets. That's really well. I remember when Oliver, who is it? There's two brothers involved in this. When they first changed over, they took over. Oliver came on the podcast, and his brother Theo didn't come on. But they are now, it went from almost a managed, now they've taken a big chunk of shares and I like that when you get someone taken over and they put their money where their mouth is. And so I quite like what Brave Bison are doing here. In a very, if you look at everything else in their sector, it's been absolutely hammered. They've taken a bit of a hit, but those figures are very respectable, aren't they?
Yeah, they're very respectable.
But it's been one of the biggest downturns ever. The advertising markets and all that stuff, but they are holding their head above the water there, so it's quite impressive there. Anything you've seen, John, on the wires?
On the wires,
anywhere?
Chapel Down, they're on a homepage as well.
Down. Oh yeah, they've gone from Aquis to AIM, haven't they?
I don't think they've moved. I think they might still be on Aquis.
They may still be on there as well. Are they okay?
Yeah, I think so. But yeah, good year for them. Nice sales growth, bit strong harvest, lots more acres planted. It's up for about 906 acres now, up from 788 last year. I couldn't work out how this is going to translate into profitability from this statement, but they talk about continuing to grow profitably. But it's a nice sector, little subsector.
Post
As I
retro.
said, so have a read that article. We did a sector report on this the drink sector the other day as well.
Yeah, strong traditional method sparkling wine volume and value growth underpinned the premiumization strategy.
Yeah.
Okay.
Yeah.
A touch of sparkle. All right.
From a sort of portfolio perspective, H&T is that an absolute shocker?
Well, do you know what? Well, the thing is, in there, I think sometimes I don't know who wrote that RNS, but there's some positives in there that's buried below negatives.
There's definitely some positives in there. I mean, you can't sort of you can't really be critical for telling the market as it is. I mean, they've at least not done what some companies try and do, is sort of tuck the bad news away somewhere.
Yeah.
But it has resulted in a fairly strong reaction to share price reaction to this news. I mean, I guess the thing pawnbroking goes from strength to strength. The trouble is they've got to sell this stuff as well, and that's where the weakness has been. So really the clues have been there for some time, and I guess I put my hands up to an error here. Watches in Switzerland, which we talked about the other day, I'm sort of saying this is a retail market, luxury jewelry, that's going to be tough. But I should have read that across to H&T because they've struggled to flog jewelry and watches as well.
Chris Gillespie there says, it's all looking good until watch out for the however word. All right. The group has made significant progress in 2023, delivering record profits and strong growth. Demand for our core pawnbroking product continues to grow and is attracting an increasing number of customers who are new to the pawnbroking. We're delighted to welcome record numbers of retail customers in the pre-Christmas period. However,
I do think it's an overreaction. I have to say.
Yeah, I do. However,
11.5% drop. It's a cheap share. Trades on a forecast P. Well, before today 7.5 times, but obviously a bit less now. But yeah, there's some rapid earnings growth built into its numbers. So yeah, I do feel it's an overreaction. I'm not going to budge on this, but yeah, when I read the RNS, I sort of winced.
You knew. I was surprised by the drop. Actually, it was low. I think some people are saying this is getting good value here because some people are jumping in. It did go down to 305. Now it's 350. So I think some people are saying, "Well, I'm tucking this away." They pay a nice dividend, don't they? About 4%. Is it 4% fair?
Yeah, decent yield. Again, I think it's a good company. What I would say is, what
happened there? What happened on the 11th of December? Did you why did that drop there? Because it dropped below the 200-day moving average on, let's have a look, the 11th of December.
Banking facilities.
I can't see anything there. November.
No, well, there you go. Nothing specific. Additional financing in November, but they're in expansion mode, and that's a good thing.
It's funny, isn't it?
To hear them tell the story.
It's right though. It's funny. HWC in the retail space is quite defensive, but even that's taking a bit of a hit. You think what's going on here? But as we go forward, like I said, interest rates are not going to come down very fast. They are going to come down. I'm going to sneeze. But I can see people, increasingly pawning stuff or selling gold to make up shortfall.
But this is exactly the problem. So fine. The loan book, the pledge book is rising, but they've got to sell the stuff as well. That the retail is a big part of this business, and that's where the weakness has been. Towards the end of the year, we knew that retail was tough towards the end of the year. The cost of living crisis has bitten, and it's bitten their retail business too. So and underestimated how tough it would be for that side of things. But you would expect FX to make up for a little bit, given the sort of boom in foreign travel at the moment.
Yeah. Well, but you know what? Holidays are still expensive. It's almost like a lot of people I've been hearing is putting it down to revenge spend just after COVID. Almost saying, I'm going to have a holiday the next 2 years now because I haven't had one for 2 years. So that's pushed the price of holidays. I wonder how long that's going to last. Holidays being expensive. U Group again, winners keep on winning. It's knocking out of the park. This company raised it's one of the best performers, I think, in 2022. I think maybe. still at that full year revenue expect to exceed 450 million. Average monthly bookings grew by 120%. Strong net cash position of 31 million, up from 18. A further 49.8 cash was also had on deposit for trading counterparts. But yeah,
classic upgrade cycle.
Yeah. I mean,
upgrades last year, they said.
And that's why essentially I think, when you're looking at companies, if you get a company come up with bad news, don't just jump in straight away, because you could have a couple of bits of bad news. But conversely, when you have a company put out good news, it tends to keep on going. Having said that, even with today's strong rise, it hasn't managed to get above that 1310. But it's been a classic. Do you know what? I've got to know. I missed out on this. I was interviewing Bobby, the CEO, when he was down here, and I could see the growth happening. And I thought, I mean, the margins weren't. The margins are getting better now. That tends to happen, but the margins were quite thin. But the top line was growing quite nicely down here. And I was in 2 months by getting into it, but I didn't. But one of the big ones I missed. Yeah, but excellent that from 160 to 1270. That's a nice gain. Also, keep on winning. Like I said, another one here. Cornerstone, another big good news. Agreement with MasterCard. The police announced they're signing an agreement with MasterCard to launch corporate card scheme. So yeah, so companies with the momentum continues fundamentally and technically. I mean, Cornerstone's share price SSF. Look at that. Whoosh, whoosh. Again, I got out here. What am I doing? It was classic, like stocks I love. Top line growth was very good. I think it was good value as well, and I think it still is. But for some reason, I don't, the wobbles about it. But there we are.
Why? Is this a recurring theme, Justin? I've heard you say it several times. Selling too early.
Yes. Absolutely.
What's happening?
I mean, there are some stocks. No, I've got to have 100% confidence in stock. There's plenty of stocks. I've
100%.
Well, no, 100%.
100% confidence.
No,
that's a very small pool of stocks, I would say.
No. What I'm saying is, I've got to have a high conviction rate in them, and of course, I'll miss out. But there've been other stocks I've held that done very well, more than double this year, quite a few of them. But I mean, it's like sometimes you're going to miss out on some winners. It's like you're going to carry some losers. It's going to happen. You can't have every winner. Just it happens to be that View Group is one of the best performers ever.
But I guess the question is, why hold something? Why sell something that you're holding? Why not wait and wait?
Why sell something?
Yeah.
Because I don't take a loss on it. So that day, I think I bought around here, a breakout here, and it came down, and I started seeing other FX companies warning, and I thought,
right,
there's sector risk here, and I thought, even though their figures are looking very good, and so I jumped out, and turns out I jumped out way too early, and their good news kept on, and it's almost like saying, it's odd, isn't it? Stocks and shares, you can look at the sector risk, and you can say, okay, that's a read across, get out, but you realise it's the bigger companies in the sector that was warning. Record is one, Argentex is another, and they're saying it's a lot of competition coming in the market. I mean, but these are one of the guys that I said were eating the other people's lunch. I think they were taking up the share, so it's odd in that respect. But there we are.
No. Interesting.
And New Group, it's just their top line were growing. So looking at the margins were very thin at the time, but then that has now fattened. A classic example of so it's almost sometimes you can be too fussy, but I think what you should always do though is one of the biggest losses you can take is just holding on to a big loss for a long time. That can really puncture your portfolio value. So it's always worth having an estimate in your mind how much loss you're going to take on this company, because after a while it's just pointless. The momentum is down, and so on this company, on any company, but. Anything else going on? Any other news you've seen, John?
Well, we had to. So I'm just thinking of my rises list. Eleco.
Eleco, yeah. Come on. In fact, Paul mentioned those. On Hot Stocks with me the day, and he said that it's good because obviously the building trade is a software specialist in that design, isn't it? Building, design environment. So
that's right, yeah. And it seems throughout all the sort of life stages of construction and buildings management, software as a service based as well. So
Oh, look at that! I did say to him several times. I said once it breaks above that and closes nicely. He did have an odd one here. Well, seller came in and dropped back down quickly.
Yeah.
But so if it closes above that, should be nice because that level there, what 84, 85 pence, and it's done that really gapped up. That's nice. It may have to come back to support, but that's good. There, it's a good sign. Really.
Yeah. And I think this is a company that stands to benefit potentially from, again, something that Jamie and I spoke about, which is the capex cycle. So there's been sort of years of underinvestment. I think that could be about to reverse. So yeah, nice little company there. Ocean Harvest, seaweed animal feed, had a good update.
Seaweed animal feed. I like
seaweed animal feed.
That's how I remember that now. Seaweed animal feed. Yeah, 13.84 million market cap. Trading update, new hires.
Yeah.
What they're saying. Revenues. What is this for the half year of the year? Oh, 3.4 million.
Yeah.
Yeah, 3.4 million.
But yeah, really strong outlook as well.
Okay.
A lot
strong.
Lot of potential. Sales coming through the various channels it's set up. It's been in build mode and it's now starting to come to fruition. So again, there was a really positive update from them today. What else did I notice? Watkin Jones, a bit of research on the site for them. It's a funny one. It's a really quite horrible update. You would have thought that they. I mean, again, it's sort of construction. Sort of goes back to that Eleco thing. It's been a bit of a downturn in the construction industry.
Yeah.
But
that's probably the results.
Swung to. Well, look, it's pretty much a loss. Profits have been wiped out. Cash is halved. Revenues up a touch. So yeah, really tricky time for them. And again, a couple of house building bits of house building news. Always keep an eye on house builders. Crest Nicholson.
Yeah, didn't they forecast their profits were a while? But, Watkin Jones sends. Look at that! It rallied to that 200-day off a low, but it's come off a bit today. So Crest, yeah, I mean they signpost this as well, didn't they? Crest, they come out with a warning a while back, didn't they? I think.
Yeah, I mean there was some bullishness around the house builders. The worst is over, but we're still going to see some horrible numbers coming through. I think the chief exec might have gone.
Where's he gone? Oh yeah,
retirement. Yeah, chief exec resigned as well.
Yeah, retirement. Peter Truscott, a member of the board.
Sudden change, but bowing out at this point.
If I was him, I'd give it a couple of months, let it rally a bit, and say, "Here we are." Do you want to go at the low? Do you?
It's a horrible update. It's a horrible update. And Vistry, conversely, was quite a strong update. They've just announced another big scheme, 236 million, 739 homes in Barnet, and it's so for me this is a sign that this switch to a kind of partner-led model, of which a large amount is building affordable homes, but both to buy and to rent. I like this model. I think this is where the industry should be heading.
Yeah, so Vistry. Yeah, it was looking nice. Yeah, it's like it's strong. It's trying to rally. It's a high series of higher lows there, higher highs. Yeah. Okay.
An absolute ton of news out today. Absolute ton of news.
Yeah, there was once, wasn't there? It was quite a few. Let's look. Any comments here? Lots of comments here. There's lots of traders. So if you don't know the story, stay away. What was that about? For years, been placing constantly as a vast. Just ignore the percentages. Work out the minimum you need to fund your retirement. Put that into pension. Then dabble with any excess.
That's fair enough.
No, I've got mine worked out. It's all right. Thanks for that, Emmy. It's good. Problem with free money is the government was the worst offender and lost all discipline with national debt.
There's a lot of discipline lost in a lot of places.
Yeah, well, that's what happens when something doesn't cost anything, you don't respect it, do you? In any form, free stuff like money when it doesn't cost anything, people just mortgage up and loan up and get overdrafts. And all of a sudden, they're surprised then when the money starts costing something to borrow. Okay, Poolbeg. I like recent news and interview by John, but still continues to drop. Where's the support, Justin? Hitting 100-day moving average today. Is it dropping, Poolbeg? That's right. I didn't realize. Last time I looked at it, it was looking quite. Let's look. There's a chart.
HVO has been dropping a little bit. It's a related company, obviously. Yeah, there you go.
Oh yeah.
It's one of those things. It's,
that may be support there. You never know, because you see it's gap up there. Who knows? Who knows? It depends.
keep dropping. I'll have a few of them. That's a really, really nice company. Or I mean, I can't remember. All the news they put out is positive. They're a very, very strong team behind that company.
Yeah, Graham. And once Mike actually gets close to 30% of a stake, he then uses his influence to get advantages for the Fraser Group. He did it very successfully with Hugo Boss, for one example. He will be pushing Boohoo hard. I assume, Graham, you hold Boohoo, do you?
Praises. He's a great businessman.
Yeah, well, the funny thing is, John, right? Most people are trading ASOS and Boohoo when the share you should be knowing was Fraser's. Because if you look at the chart of that, it's like,
it's amazing.
I mean,
think about him taking stakes in companies, and I've said this before, but it does not mean that he's going to buy them.
No, it doesn't. But there we are. There's if you go back to 2020, there's this Fraser Group from 2020. It's gone from £2 to 7 or £8, £2.5 to £8. Let's look at ASOS, and you can say, who's the clever guy here, Mike or us holding. I don't hold Boohoo or ASOS, but it's almost like you go with the momentum, because Fraser had strong momentum and has continued to go up. But these have had downward momentum; they've continued to go down.
His most successful acquisitions have been where he's bought brand assets.
Yeah.
So he owns a lot of the brands that get sold in his shops, and that supply of the sort of like vertically integrated supply chain is fantastic. Set his own prices. So, a really fantastic business. I think that I mean, everyone hated him. He was just persona non grata, and people sort of, they looked at him and thought that his business was somehow a reflection of this caricature that the media painted of him, and the city didn't like him. He doesn't play by the rules, and that's why I like it.
Yeah. Well, there's been some questionable comments on the way he acts, isn't it, and treats people. I don't know if that's true, but
no, he satisfies his managers very nicely.
Oh, is that right? Okay. Let's have a look. Oh, Graham does. He said, "I hold Fraser's." Well, I'm Graham. If I held Cornerstone, I'd sell half. It could do very well, but it could come back a lot at a fast rise. There's always a chance that when companies rise very quickly, but unless it's backed up by fundamentals and if it's undervalued. But nevertheless, you can still get sellers in small cap companies taking it down a bit.
Yeah, I think that's a good approach to take. If you've got something that has, I heard someone describe them as supernovaed recently. So they sort of explosive move upwards, but it can quickly become a quick deflation as well.
Yeah. Toby says, any good entry points for Bell, IUG, ETX, and Hvivo ready to buy now? No. It's not trading. You should do some research and think do tell us. What do you think? Where do you think the good entry point? And let us know why. Because I'm not over the fundamentals of Bell, ETX, and Hvivo, really. I mean, whenever we look at companies, it's just, flagging up some ideas. Hvivo, look at the chart.
Cracking company. As I said, I think they've and again, hands up, I own it because I like it. And I think if we look at the chart of that, you may have seen it pull back a little bit recently as well. No, not massively. Big rise there, but you've got a potential entry point. He almost hit 30, back down to about 25. So I think it's a great long-term growth story. The capacity is going to expand through this new clinic, essentially, their flu camp they're building in the Docklands. They put some progress reports and pictures of that out the other day through LinkedIn. The contracts they're winning are just insane. And expanding their portfolio of drugs, human challenge models, all the time. Like it. Talking about a book.
Yeah. Well, do you know what? Yeah, I'm not allowed to do that. Apparently, because even though someone mentioned one of my companies yesterday, so I talked about it. Apparently, I'm ramping my own stocks. So, all right, let's. I would say some of that. You always got time. When your selling price rises, that comes back. It does settle a bit and go sideways a little bit. So I wouldn't jump in if you are going to jump in. Always start off small, because it could, like I said, that's a temporary, a small, short-term downtrend a little bit. But it may have to go sideways a bit. So it's very rare you see a big rise of that, and it goes back up But unless they release amazing news, which you never know, you know. Okay, let's just some business stories. UK government borrows falls to 7.8 billion. Is that all? Is that all they're borrowing? 7.8 billion. My overdraft is more than that
in a month.
Yeah. They're saying now this could pave the way for a bit of spending at the budget. Of course they are. It's all set up for that. It's all set up so we can just really unleash the dogs, or whatever. I don't know what the saying is, or you know, open up the hatches, just make the money flow into the economy because they need votes. They're going down quickly, so they need to sort of you know, sort it out. This is interesting. China, a terrible run in Chinese stocks, awful, of course, the property crash. But they're now thinking of a rescue package worth 270 billion, which will help a lot of resource companies, I suppose. They're looking at mobilize about 2 trillion yuan. They earmarked 300 billion yuan of local funds to invest in onshore shares and offshore shares via the Hong Kong exchange link. So it's interesting to see that. They are aware of it, aren't they? They know what some of the things he's done for tech companies, and also the property crash hasn't helped China at all. And whereas you've got Japan a near 34-year high in the stock market, whereas China is the opposite pretty much. It's really suffering. So it'll be interesting to see. But yeah, there we are. Any other things, John, on your head, in your head on a macro level?
Anything in my head on a macro level? No, just wait and have a look at the interview with Jamie. Hopefully up on the site.
Yes. I'll check that out. Okay. Jamie Constable with John. And what are you just checking about macro stuff, yeah?
Yeah, macro. Well, we speak on a regular basis. He's very, very insightful. A deck that's been doing the rounds with from Singer. Really quite insightful.
Okay. Lovely stuff. Thanks, everyone. That's it on this damp, dreary Tuesday. Don't forget, if you could hit that thumbs up button and subscribe and download the Vox Markets app. Until tomorrow. Speak then. Bye-bye. See you, John. Bye-bye.